Hi guys, I'm Dan, this is Kai, we are the directors at Crescent Mortgages. It's come to our attention that a lot of people have absolutely no idea what value property they could buy based on their circumstances, their deposit, their income. Today we're going to be giving you a breakdown of what your deposit and what your income needs to be to achieve a specific purchase price, which today we've based on the national average in the UK at time of filming. Without further ado, let's jump into it. Before we jump into any figures, as always, just to remind you that we're not YouTubers, we are mortgage brokers. So as we always emphasize, your specific circumstances will dictate what's achievable. So this will be quite generic, but any questions, give us a call, head over to the website, send us a message, put something in the comments. We can have a fee-free conversation with you to let you know what's going to be achievable. But I think we're going to talk about a bit more generic figures today, which we've written down.
Yeah, we're not going to pretend. We're not going to pretend to remember. There's too many.
Yeah, normally we kind of look at the notes on the slide, don't we? But today we are going to look at them because there's quite a few numbers, and yeah, we're not going to remember them off the top of our heads. The first thing to jump into is November 2022. ONS data suggested that the average property value in the UK is
£295,000.
So obviously, some people want to buy for more, some people less, but 295 is the average. So that's the figure that we're going to use today to confirm kind of basically how you can make that happen based on your circumstances. We don't want to kind of drown you in numbers. So we've got three examples, which will then kind of break down even further. But the three examples we're using are buying for 295,000 with a 5% deposit, a 15% deposit, and a 40% deposit. So they're the three scenarios that we're looking at. Now, bear in mind that obviously some people might have a 10% deposit, some people might have a 25, but we don't want to overdo it. So we're looking at those options specifically. And the reason we're doing that is because we appreciate that some people have, maybe not as high an income, but they have a much bigger deposit available to them, whether they've saved it, whether it's kind of a gift from family. And some people have a much smaller deposit, and unfortunately that, you can't pluck money from thin air. So that is all you have to work with. So we've gone with the 5% deposit as the smallest, which is the kind of the smallest deposit that most lenders will accept, and then 15% and then 40%, which is generally anything more than a 40% deposit, you're generally eligible for the best rates. That's why we've used that as the kind of the larger example. In terms of breaking down the figures, so should we maybe start with the 5%?
Yeah. We'll run you through the 5%, what it looks like, the figures, how they go, and then we'll show you the 15 and the 40%, and you can see how they compare. If
you know if the 5% isn't going to relate to you, then feel free you can watch it, or feel free just to kind of scoot through to the 15 and the 40%, or whatever section kind of relates to your personal circumstances. So if you put down a 5% deposit on a £295,000 property, as a monetary figure, the deposit works out to be
£14,750.
Exactly, which would leave you with a mortgage required of £280,250. Now, based on lenders' affordability assessments with a 5% deposit, the maximum that any lender is likely to give you is 4.5 times your salary. Again, depending on your income. So based on that scenario, your income would need to be
62,300.
Yeah, so if you've got a 5% deposit and you've got an income, either you or a combined income with a partner, spouse, friend, whoever you're buying with, of just over 62,000, then it would be achievable for you to purchase at that level, subject to a few caveats, which we're going to come to in a moment. If you put down a 5% deposit and you bought for that level over a 35-year mortgage term, that would give you a mortgage payment.
So your payment's something like £1,500.
Roughly, based on interest rates at time of filming. Bear in mind with a 5% deposit, your interest rate is going to be a bit higher than if you had a bigger deposit. So we based this on a 5% deposit. If you're looking at 15% deposit, then that equates to a deposit of
£44,250. 44,250.
Leaving a mortgage required of £250,750. Based on that level of that deposit, you would need an income or a combined income, if it's a joint mortgage, of around £53,000. Obviously, it's more difficult if you're buying on your own. If you're buying as a couple, then obviously you would £26,000 roughly each, which I think is there or thereabout the kind of the national average income as well. And you would be able to buy for that kind of 295 level as long as you had that 15% deposit. Based again on a 35-year mortgage term, assuming that your age allows that, which is a different conversation, your monthly mortgage payment comes back at, what is it, around?
Around, comes now down to 1,235.
again, based on kind of average interest rates available today. And if you had a 40% deposit, so you have quite a significant amount of money in the bank, that comes to £118,000 as your deposit, leaving a mortgage required of £177,000. At that level, your income or combined income would only need to be, how many are the good ones?
£36,000 now. Combined, all singular, £36,000 is the household income.
Yeah, why are you dragging it out? Because I'm not giving you much.
I'm just trying to get a couple more points in.
And if you came up with a 40% deposit, again, all based on you buying for £295,000, your mortgage payment will come out at around £840 based on rates today. And that's lower, partly because you would get a slightly better rate with the bigger deposit, and partly because you're putting down a bigger deposit, so your mortgage is smaller. That's the initial grid. Now, if we can edit this right, you should be seeing all of those numbers here on the screen right now. So again, obviously you can look at your specific circumstances. Couple of caveats, which we did say we would mention. The first one,
I'm going to say that other deposit thresholds are available. Okay. I'm going to start with that, I think, actually, because generally your deposits, every 5% of deposit makes a difference in terms of interest rate. So as Stan said, 5, 15, 40 we've picked as a good spread, but in theory, 10%, 20%, 25, 30, 35 can all have their own bearings. Not only do you borrow less, but your interest rate might drop as well. So do remember there are differences in between, and you can see roughly, hopefully on the grid, if it's still around, you will then fall somewhere in between those figures. So do remember that.
A couple of additional really important caveats, which I'll kind of combine into one. All of the figures that we've given you there in terms of the income that you would need to achieve any given mortgage is on the assumption, so that's all based on the maximum income multiples that a lender's willing to give you. But if you have significant debt, so if you've got a bunch of loans, credit cards, if you've got children, you've got childcare costs, or if you're older than, I don't know what age to give, but if your age limits your mortgage term, so let's say, for example, you're 60 now and you're only going to work until the age of 67, and the lender may only give you a maximum of a 6-year mortgage term. That's quite an extreme example. If you can only have a short mortgage term, because your payments will be higher, they may not lend you as much. Yeah. So everything we've given is on the assumption that you can have kind of a 30 to 35 year mortgage term, and that you don't have significant debts. If you have a couple of debts, let's say you've got one loan and a credit card, one child, for example, the affordability is really going to vary from lender to lender and case to case. So make sure you run that past us so that we can kind of check affordability with published calculators to confirm what's going to be achievable. But yeah, the assumption is minimal debt and a long mortgage term. The income multiple limit, so how much the lenders will give you, varies from lender to lender. So we've given you some examples of maybe some of the slightly more generous lenders, but bear in mind that if you are looking to borrow right up to the affordability limit, that you may rule out some of the less generous lenders. So just bear that in mind. Or if there's a kind of other criteria limitations around your circumstances, again, that could rule out some options. So most of what we've given here are kind of generally more favourable best case scenarios within reason. But again, if there's anything that makes things more difficult, we'll obviously run that past you to confirm what's going to be achievable. We've covered the deposit that you're going to need and the income that you're going to need. The other thing you'll need to factor in if you're looking to buy for this level is basically your fees. Do you want to jump into those?
Broker fees, given that we're mortgage brokers, we'll start there. Typically, mortgage brokers do charge a fee, but there are some firms that don't. If they do charge a fee, it might be £500, might be £1,000. That's relatively typical. There are fee-free brokers, such as ourselves, who get paid by the lender.
They all get paid by the lender.
We all get paid by the lender, yeah. And that doesn't impact your rate. Just because we're paid by the lender, there's not a different rate to what you get direct to the bank, for example.
Yeah, you're not losing in any way. We just choose not to charge you a broker fee on top.
Just a business model.
So if you come to us or a fee-free broker, there'll be no broker fees. Yeah. Good point. So when you buy a property, you will normally have to pay, basically, it's called stamp duty, land tax. It's basically a tax as you seem to pay kind of with any transaction. Quick point, we're not tax advisors, so you will need to check stamp duty yourself, and the rules do change. So depending on when you watch this video, things may change, but at time of filming, if you're a first-time buyer, you will not pay stamp duty on a property for $295,000. So if you're a first-time buyer, it's 0. If you're a mover, it would be 2,250 is the tax that you have to pay when you buy a property of this value. There is another higher stamp duty if you've got additional properties in the background, but we're not going to jump into that just yet or at all on this call. But obviously, feel free to have the conversation, check with your solicitor, and we can have a bit more of a detailed conversation when you speak to us. Legal fees. You need to pay a solicitor when you move. Can vary depending on the transaction, whether it's freehold or leasehold. The quality of the solicitor, some charge a bit more, some have better service than others. But for a standard purchase of a house, you're probably looking at under 2,000, aren't you?
Yeah.
So maybe somewhere between 1,500 and 2,000, give or take, budget, if it's straightforward. I think
that covers the fees, really.
Pretty much the fees, isn't it? Yeah.
There aren't potentially very little fee. I mean, if you're a first-time buyer, in this example with a fee-free broker, it's really just paying the solicitor.
Yeah.
It's the only thing you need to factor into your savings or your...
Should mention, though, that 1 or 2 lenders will charge you a small fee for the mortgage valuation, but most offer a free valuation now. And you can opt to organise your own private survey, so you may want to kind of send a surveyor to look at the property in more detail to make sure that you're happy with the structure and the condition before you obviously go ahead and buy that property, which that's optional. You don't have to do that, but obviously that would be an extra fee as well. But other than that, again, as for a first time buyer, lender may carry an arrangement fee. If you were about to jump in on that.
No.
But that can often be added to the mortgage. So again, other than your legal fees for a first time buyer using a fee-free broker, upfront fees can be very, very minimal. Again, other than those legal fees. Were you about to jump in with a point there?
No, I was just going to add in that the valuation that the lenders charge, if they charge, and most of them don't nowadays, very, very few do charge that valuation fee. It's a nominal fee. It's 100, 200. It's a fee that you probably don't have to save for. If that makes sense. It should just be able to come out of probably your monthly spending, I would guess.
The only other one that we've forgotten is if you're moving house, obviously your estate agent fees for selling your property. So normally if you're buying, you don't need to pay for the estate agent. That's paid for by the seller. But if you're moving house and you're selling yours, you will need to pay your estate agent. They all charge, some charge a fixed fee, some charge a percentage of the property price. So obviously shop around and confirm that, because that's going to need to obviously come out of your budget. The main point for me is, as with everyone looking to purchase a property, take this information and hopefully it will be helpful. But before you start to look for properties, speak to a broker or your bank. Obviously, you can contact us directly to get an agreement in principle tailored to your circumstances specifically. We need to get your details before we can confirm if you are going to be eligible, but this should give you a really good idea. Anything else to add?
No, I was just going to reinforce the same point you made at the end there. Yeah. All of that we can work out for you. The fees, we can be quite specific. When we speak to you, we can be a lot more specific on that.
And the final thing, as always, to stress that everything we've covered is at time of filming. Market does change, things get, rates can improve or affordability assessments can change. So obviously if you watch this in 6 months, everything might not be bang on. So we always encourage you to contact us to discuss your specific circumstances. Thanks for watching, and we'll see you next time.